This fall, the brightest minds in finance will flock to Florida for a weekend that will change your life, with insights from the brightest stars in the financial universe and an event that will bring them all together. Presenting the first annual T3 Live Finance Festival at the Mayfair Hotel and Spa in Coconut Grove, Florida, for a weekend you'll never forget and memories that will last a lifetime. The Finance Festival, a Todd Harrison production, brought to you by T3 Live and TradeStation. A portion of the proceeds to benefit the Ruby Peck Foundation for Children's Education and the Crohn's and Colitis Foundation of America. Friday, November 6th to Sunday, November 8th, 2015. Bring your spouse, tell your friends, make some noise, and take charge of your financial future. It's gonna be nuts. Space is limited, so act fast. Early bird discount registration ends August 31st, 2015.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany, Umar, and together we bring you Morning Call.
And this actually will be one of our last morning calls for multiple months. So what I want to do is I want to give everyone the full version so you can get as much Brittany as possible, since she will be leaving us because she is expecting a bundle of joy in the next month or so.
I am. We're very excited, but we'll miss everybody here at the call, of course, for the next few months. But should we just jump right in then for our last call?
Yes, the show must go on.
Well, we are seeing green arrows around the world as Asia bounces back, with the Shanghai up about 3.4%, while Europe also has some small green arrows.
Yes, a lot of people were a little worried what would happen in China, and the Shanghai exchange was up 3.4%. So with that said, no headwind there, and then you also have Europe up a little bit. So if you look real quickly overseas, first at the HEDJ, which typically trades or leads us, you will see that the 200-day moving average did hold here on the HEDJ, and you had a small bounce. So I think the question is, is it a bounce to be sold? What kind of bounce? I think the next resistance here is, about 63.80 in the HEDJ. If this area wants to resume some leadership, this spot should not be broken moving forward. And then if you want to look at the FXI, as bad as China's been, or as broken as it's been, or volatile, obviously you had some levels to get out of the way, which could have been right here on the FXI. This was your overthrow low, and you did have a small higher low. So, some are saying it's a double bottom, others are saying, the longer it stays down here, the more it's going to create this bear flag, and then how volatility could increase if that low is taken out, but that hasn't happened yet. So we're kind of in wait-and-see mode. You still have to keep your eyes on China, as it has a lot to prove.
Well, our market's got its oversold bounds, and now we are seeing some small upside follow through this morning. So do you think it gets sustained today?
Yeah, I think if you bought yesterday for a day-and-a-half bounce, which we talked about because the oscillators were minus 65, you sell a little bit into this up open. There's still some school out there that think that the range is going to be resolved to the upside, and that today's Fed liftoff, could actually be somewhat of a catalyst. But if you look here at the overall SPX, you will see, there has been a heck of a lot of action in 2015. This was your first start of the year where, everyone was saying this support was going to break, and then we rallied to highs. And then since, February, we've been in this range. Okay, we've been in this range where 2040 is big support, 2130 big resistance, and at some point this channel could resolve. It's just a matter of when. Until then, we have to navigate it, and navigating it sometimes could be trickier than others. At least yesterday, you had a calculated bounce where, it took out this 2078, and now it's getting right into the resistance zone. So if you bought yesterday and you want to sell some today, be my guest, because if this spot gets rejected, okay, you could get a lower high here, and then perhaps the bears get in some control. If we reclaim this with some kind of power, all of a sudden be careful just rolling up shorts, because, again, we're still only a few percentage points from the high. So as of right now, I would trim some into here, and we'll see by the end of the day. So you better watch the recap on what the landscape looks like.
Well, we saw decent participation across the board, although the rally was led by energy. Do you think that we've seen a bottom there?
It's a day one. We've seen lots of day ones in energy, which have been trades, but not sustainable trades. And yesterday, around 10 o'clock on the VTF, I'm like, what? Energy is actually leading this, so if we bounce, it could be a trade, and some guys took the trade. And if you look here at the XLE, you'll see, decent size day one. What did it do? It took out a prior high and engulfed this spot, but only right at the 8-day, which it's been controlled by. Okay, we've seen sometimes a bounce towards the 21-day. So, if they want to sustain this a little bit more, it could see, some better action. At this point, you had lots of trends broken here in the XLE way back when. You had the head and shoulders top right here. You had it break below the 200-day. So active traders get rid of it below the 8 and 21-day. Institutional guys sell sectors when it breaks the 200-day right there. And, so if we want to see some kind of bounce back, you could see a bounce back towards 72.50, and then that's when the bears could step in. So that's not a heck of a lot of room, but at this point, there's a trade there. If it wants to sustain yesterday's action, and if you're swinging this, you probably want to see at least a 69.50 hold for then, perhaps a little sideways action to get to that area. So at this point, perhaps a small tradable bounce. We'll see what happens if it can get to the 72.50 in the coming sessions.
Well, and technology, which has been the leading group, gave a small red dog reversal yesterday. So can it build?
No, it's up a little bit this morning. We'll see. This is more of the trading sector that traders have been focusing on. This has been the spot that has led the market. Last time we went to highs, the Qs were in fuego, so to speak. You look here now, though, some question marks to the fact where you had this resistance right here, and then finally took it out right there to go to the highs and then broke below. So yesterday, if you sold when this little area got broken around 112, perhaps you bought some back here on this red dog reversal using the 109.94 as your pivot. If so, I would sell some at the open. We'll see how does it handle this 111.80 to 112. Does it get here and get rejected or get reclaimed? Again, day and a half moves are good strategies for traders. The question is this now a higher low for a move back to highs? So we shall see and measure it along the way.
Well, the bios also helped fuel yesterday's gains. What would you say is the next level to watch there?
It's good to see the bios hold the 50-day, so it was worth watching, and it did bounce with a little power yesterday. And you look at the IBB, and you see that the 50-day did hold. Okay, last time the market acted healthy, the IBB went to highs before failing. So at this point, you're still in this trend. The trend has been strong, and here you are. The question is, do you sell into this 390-ish or 388-ish? Probably first attempt, yes. Guild did come out with earnings, and they were pretty good, and it's up. So I'd watch Guild and see, does Guild take out this 118 resistance or pause here? Hopefully we get a decent sized gap to trade against moving forward to see if this leader can lead. So 118 is resistance. See how Guild fares there this morning, if it gets reclaimed or rejected or just pauses for better action.
And the Russell, which has been weaker, was actually able to stage a decent red dog reversal yesterday at the 200-day. What are your thoughts there?
The beauty of that tactic, the red dog reversal, is you could trade it anywhere. And this hasn't been the leader the past month or so. This actually diverged and showed some relative weakness, which helped fuel the downside move last week. But you look at the IWM now, and if you approached it yesterday, as an independent day, all it did is break below this low here early morning, 120.27, took it back and closed strong. That's a $1.40, trade versus support. So the question now is, can it build? At this point, the market's full of these, breakdown failures, and this could be one. And if that's the case, maybe it trades back to this 122.89. So if you're long from here and took a third, trail it, and perhaps into this spot is where you'll see resistance. This would be probably resistance 1, and this would be, resistance 2 for the IWM.
Well, we are pretty much through the thick of earnings. Last night we heard from Twitter. It's down about 11% this morning, as management said that it will be difficult to sustain growth. What are your thoughts there? And while you're at it, I want you to throw in Yelp.
Right, both bottom of the barrel. And Twitter, you didn't know what to expect going into this report. The pessimism around it was huge. So I was like, you know what? Actually, in the morning, I'm like, let me just buy some calls to be involved, just in case they do come out and beat the street better than expected, but whatever. So with that said, I bought it when the stock was negative on the VTF, and then I come back from lunch and it's up $1.60. I'm like, oh, I just almost doubled my money there. I'll sell half. So anyway, the moral of the story is you take options into earnings, not stock, because you never know what's going to happen. And after hours, it was trading as high as 41. You look at the chart real quickly, and you will see, it went basically right to this resistance just on the report before management opened their mouth. And then from there, actually on the VTF, some people saw me fade it for a quick trade. And then when I was in the recap yesterday, I was like, listen, if you're trading it after hours, okay, if this 36.50 or 37 breaks, get out of the way, especially if this 34 doesn't hold. So at this point, it's now below that. This stock will be in my opinion, in the penalty box again, for multiple time period, and in my humble opinion, it probably sees below, 30 before it sees 40 again. And I guess the only catalyst now would be lower prices, because then maybe it's more attractive for a Google or something. So at this point, just stay out of the way. When it comes down and gets so oversold, maybe you buy some calls just in case. Yelp's been broken for so long. A lot of people like, how do you trade these momentum names, and what happens when the momentum leaves? So if you come to me while it's boosting or loading, the bottom line is when momentum names or high valuation names are in play, they're above the 8 and 21 day. If they're not above the 8 and 21 day, typically they're not a swing trade. If they trade below the 200 day, usually they're not even worth holding, because that's when institutions sell it. So with that being said, let me see if I can get Yelp up one more time. If not, we will move on, okay? And at this point, it's not coming on, so I would just write down 25. 25 is big support for Yelp. If you're not in it, perhaps down at that area, there could be some bids.
Well, we have to talk Facebook as well, because we will hear from Facebook tonight. We want to go over pivots for after-hours traders, but not only that, we've talked about the high expectations for this report. Are expectations too high?
At this point, if you did the consensus trade buying Twitter because you thought it was too negative, you would say, you can't be in Facebook because it's too positive. But there's a lot of money in Facebook, and Facebook's been best in breed, and thank goodness. And I would hate to see, Facebook, miss, because I don't want to lose another leader to trade. And if you look at the chart here, Facebook, which we actually have the chart, has been awesome. This was your last pivot to buy. That was a pivot to buy. It just pulled back from 99 down to here. So if they show that they're not doing all the, if they're not increasing their costs, because their costs were a buzzword 2 quarters ago, and the growth is there, after hours, I would be looking to see if it can clear 99.24 for a move to about 105. If it's just in line, like you said, with expectations so high, chances are, you could see a move back towards the 88 or even 85. So I would go in there writing, 85, 88 is support, and then if it's a blockbuster report, above 99.25, play it after hours, and I probably will not be doing options into this, just because I'd rather trade it after hours. There's been more than enough juiced that way.
Well, we have gotten through a lot of earnings as far as high beta tech is concerned. Google, Amazon, Netflix have all been best in breed. How do you think they look heading into today?
Well, they're all trying to hold their gaps. Some traded into their gaps from earnings, some acted better. But all in all, these 3 stocks are leadership stocks. So if we're going to at all get any kind of momentum or get back to the upside of the range, these have to be in the game. And if you look at Google, real quick, this has a lower level pivot to trade against. It was upgraded today, so see if it can clear this. If it can clear 667, chances are that's showing you there's some power back in the market. Amazon was out of play yesterday, but still holding the majority of its big gap. It's up $4 or $5 this morning. It also got upgraded today. So see if it could hold this, and if it clears this lower area for a little bit more power, but be careful buying strength. And even Netflix. Netflix gave you a 2-way trade yesterday. Traded below the pivot, which I think some of us caught short, and then you could have got long when it hit the 21 day. And if this is going to show some power, you probably want to see a high volume trade above this 108 to 110, and that would show you it's back in play versus in consolidation mode after a massive move that it's seen.
How about Apple? It has been pretty much out of play. Is there anything to watch there?
Well, as you said, out of play and in the lower end of the range, so it's not really in the danger zone, but it could be if it breaks 122. You look at Apple and you'll see here's the size of this channel. It's been in this for multiple months. Definitely boring, small trades along the way, nothing to write home about. Here's your support. If it were to break and close below 122, the bears will probably start roaring, and some might even short this year. Short below, and then you have a retest of the 200 day. If the market wants to rally and it wants to participate a little bit above 124, and then your next big resistance comes in back at 127. So very small inside range. We'll see what happens today. Sometimes they use Apple to maneuver the market psychologically on Fed Day, and we'll see if it's to the strong or to the weaker side.
Well, you mentioned it is Fed Day, which means that the banks could be active. So what does the landscape look like there?
They just had a pullback, so if the Fed indicates at least one rate rise and then gradual, some money could flow here. I think they have to signal liftoff, and hopefully it's even September, to sustain the move that these banks have seen. Citigroup has shown some relative strength. I like Citigroup. You know, if you're going to be in a bank, this actually held the 21-day, so it's stronger than some others. If you got rid of it on the red dog reversal here after a massive move, not bad to buy back. You know, Bank of America, you know, even with the management shakeup, it also held the 21-day and held the earnings gap. So maybe if you want to be long versus that spot. And you know, just to show you how, you know, J.P. Morgan's, you know, is okay but relatively weaker. It's actually just trying to hold the 50-day. So again, look at these small little red dog reversals here, though. That was nice signals to reduce after big moves, and if you did so, you know, you could buy the dip, and that's what you want to do. You want to, you know, look for a sell signal and buy back, and as of right now, you have some support areas to trade against in the banks.
Well, yesterday you said to take profits in the TLTs. What are your thoughts as we get ready to find out whether the Hawks or the Doves will take the lead today?
Well, you know, we'll find out, I guess, not with a conference, but with statements. And I think that the move that we just had is pretty much priced in, you know, one rate hike. You know, the TLTs have been very tradable this year without opinions and without just sitting. You look at the chart here, the TLTs, you'll see here's that accelerated trend line that broke to the downside, then the intermediate trend that broke to the downside. Then it started basing and acted better and gave you actually another trade through this descending, you know, little break here. I'd rather see you sell 122s than buy them. And if they are more hawkish, you know, see what happens on the pullback if it holds this 118.50 or not. I do think that, you know, this is already priced in one rate hike. If it seems like it's going to be two rate hikes, you know, perhaps, you know, it goes back to the lows. If it's, you know, what's expected today, you know, maybe it dips to this 118.50, which I'd rather see you buy back there if you want exposure versus, you know, up here.
Well, and with that said, that is your morning call. Happy trading. Have a great day.